Hey, thanks for being here today. Make sure you like this video, leave a comment, and subscribe to the channel before we get started if you want to stay ahead during what could be a once-in-a-lifetime financial shift. XRP Army, it's great to have you back. This is where we break down the latest Tiny G updates and the most important developments across digital assets. Be sure to hit that like button before we dive into today's discussion. We publish new content every single day at noon and 7 p.m. Eastern Time. Just a quick reminder, this video is for educational and informational purposes only. Nothing here should be taken as financial advice. Always do your own research before making any investment decisions. Thank you to everyone who likes, subscribes, shares, and comments on these videos. Your engagement helps this information reach more people, and because of your support, I can continue delivering deep and valuable insights to the crypto community. I genuinely enjoy reading and responding to your messages, and I truly appreciate every one of you. All right, everyone, we need to talk because something unusual just happened in the XRP ETF space, and it doesn't add up at first glance. And when something doesn't make sense in the market, that's usually where the real story begins. This is a pattern I've seen before. During the rise of internet stocks in the early 2000s, there were moments when large institutions quietly pulled back from public offerings, not because the internet was failing, but because the rules hadn't been written yet. Retail investors saw fear, while banks saw timing. And once again, that same pattern appears to be repeating. A well-known global digital asset manager quietly withdrew its U.S. spot XRP ETF filing. There was no press release, no public explanation, and no warning. Even more interesting is the timing. This happened during a period when demand for XRP exposure is clearly rising, not falling. Today, I'm going to walk you through what happened, what we know for sure, and what simply doesn't make sense. And remember, telling the truth often looks like treason in financial markets. This move may not be negative at all. In fact, it could be setting the stage for something much bigger. We'll also cover recent Ripple developments, ETF flow data, regulatory timing, economic policy, and the infrastructure Ripple continues to build quietly in the background. Let's break this down. So what actually happened? Let's start with what can be verified. A global asset manager called WisdomTree, an institution that has been around for decades and manages billions of dollars, removed its registration statement for a planned U.S. spot XRP ETF. According to SEC records, the filing was withdrawn on January 6, 2026. This is similar to a company pulling a product launch shortly before release, not because the product failed, but because regulatory approval wasn't finalized yet. The market still exists, demand is still there. The launch was simply paused. What really stood out to me was what wasn't included in the filing. There was no stated reason for the withdrawal, no regulatory denial, no compliance issue, and no language suggesting a loss of confidence in XRP. It was a clean, silent exit, and that silence is what triggered speculation across the market. This move is especially unusual because it came at a time when interest in XRP-linked investment products remained strong. That's not an opinion, that's visible directly in ETF flow data. And this is where the story begins to fall apart if you assume demand wasn't there. Institutional analysts who track daily fund flows noticed something strange. XRP-linked products were receiving significant inflows, while Bitcoin and Ethereum ETFs were seeing outflows. Over 2 trading days alone, inflows approached roughly $120 million. That reminds me of gold during the early 2000s. While tech stocks were collapsing after the dot-com bubble, gold quietly absorbed capital. No hype, no headlines, just steady movement. That's exactly what this feels like. People weren't leaving crypto, they were rotating out of crowded trades and into XRP. Whenever the numbers don't align with the narrative, that's when I pause and take a closer look. Now let's talk about where these ETF inflows might be coming from. I want to be very clear, this is not confirmed, but it's a perspective worth considering. Vanguard recently enabled tens of millions of clients to access crypto ETFs through approved third-party products. Anyone who's worked with financial advisors knows how this works. They don't chase headlines. They rebalance portfolios quietly, one client at a time. Then suddenly, volume appears. Not long after, XRP-linked ETFs began seeing consistent inflows and stronger bid pressure. I can't prove this definitively, but the timing lines up. It looks very much like advisor-driven capital, not retail FOMO. And that's a very different kind of money. Here's another detail most people missed. Because the ETF was withdrawn before launch, no ETF shares were ever sold. That means there were no redemptions, no forced selling, and no portfolio unwinding. It's like canceling a show before the doors open. No tickets need to be refunded. For now, the stage simply stays dark. That's what made me pause. Institutions don't make quiet moves without a reason. Could WisdomTree be waiting for clearer U.S. regulatory guidance? Could they prefer a non-U.S. structure for better risk management? Possibly. The story's still developing, but these decisions are made by very sharp minds, and the quiet moves are often the most important ones. Now, zooming out to the bigger picture, even with this withdrawal, the XRP ETF ecosystem remains very much alive. Canary Capital, Grayscale, Bitwise, Franklin Templeton, and 21 Shares are all active or operating in the U.S. Total exposure across XRP-related products is approaching nearly $2 billion. In the early days of index funds, only a handful survived, but those that did benefited from concentrated capital, improved liquidity, and stronger inflows. In a strange way, fewer ETFs can actually be a positive. We're also seeing new product structures emerge, like covered call XRP ETFs, designed to generate yield rather than restrict supply. This isn't about removing XRP from the open market, it's about monetizing exposure. In Europe, WisdomTree continues to operate an XRP ETF under a different regulatory framework. Capital doesn't disappear, it relocates. Different jurisdictions carry different risk tolerances. This isn't a lack of confidence, it's a regulatory decision. On the regulatory front, Ripple leadership has been clear. A key U.S. court ruling confirmed that XRP is not a security. However, the U.S. still lacks comprehensive crypto legislation. That's why Ripple continues pushing for clarity through bills like the Clarity Act, which could be voted on very soon. If that happens, everything around ETFs changes overnight. Meanwhile, even traditional media has started to shift. Major outlets are now calling XRP one of the strongest digital assets of the year. XRP ETFs saw inflows during market weakness, not strength. That's accumulation. But the real value of XRP goes beyond ETFs. The payment use case matters. Traditional cross-border banking is slow, expensive, and filled with friction. XRP was designed to eliminate those delays. ETFs bring attention. Payment rails create long-term utility. And this brings us to infrastructure, where Ripple truly stands out. While headlines create noise, Ripple continues building. Treasury automation, compliance tooling, real-time reconciliation, and multi-jurisdiction reporting are quietly being integrated. This isn't hype, this is financial plumbing. Infrastructure always matters more than headlines. So when you step back and look at the full picture, rising demand, improving regulation, expanding infrastructure, and institutional interest, the withdrawal of a single ETF filing doesn't look like weakness. It looks like preparation. If this video helped you, share it with someone. Leave a comment and tell me what you think. Your support allows me to keep delivering deep and high-quality insights to the crypto community. Stay focused, stay curious, and keep a close eye on XRP because the quiet moments are usually the ones that matter most. This content is for informational and educational purposes only. Nothing here should be taken as financial advice. Always do your own research before making any investment decisions. Some events are loud. The ones that truly change everything are quiet until they're not. And this feels like one of those moments. Don't blink.